Hello. The year 2020 turned out to be an extraordinary year for stock markets. Extraordinary in two respects. One, the economy market disconnect became very conspicuous. When the economy tanked into a severe recession, stock markets boomed globally. Second, we had a massive bear market and a spectacular bull market all in one year. In March 2020, the markets crashed by more than 30%. Normally, when market crashed by more than 20%, it is a confirmed bear market and recovery will be very slow. But in 2020, the bear market was short-lived and what followed was a spectacular bull market. Nifty recovered more than 85% from the low levels of March. The rally was led by pharmaceuticals and IT. Pharmaceuticals, which gained from the pandemic, recorded 61% appreciation. The index, pharma index, appreciated 61%. The IT sector, which was not affected by the pandemic, recorded 55% appreciation. The index appreciated 55%. Financials, which normally perform well, underperformed the markets. The PSU banking index lost 30%. What is the important lesson from this crisis, from 2020? The most important lesson from 2020 is that it is impossible to time the markets. Those who panicked and fled from the market following the crash of March 2020 lost heavily. And unfortunately, many investors panicked and fled from the market. Those who stayed invested made excellent gains. And those investors who continued to invest during and after the crash made spectacular returns. So now, with the Sensex and Nifty at record highs, what should investors do? Book profits? Stay invested? Or continue to buy aggressively? Let's try to answer these questions. The two facts are important. One, market valuations are very high. Even if you go by the most optimistic projections for financial year 22, the Nifty EPS of more than 600, the valuations are very high. Price earning multiples are more than 50% higher than long-term averages. At high levels of valuations, the markets are vulnerable to corrections. At high valuations, corrections can be very sharp and swift. This is the risk in the market. Second, this is a liquidity-driven rally, and liquidity continues to be strong. Presently, it appears that in 2021 also, liquidity will be benign. Central banks are continuing to create liquidity. Interest rates in the developed world are near zero. Dollar is declining. Therefore, emerging markets like India are receiving a gush of liquidity. So, this kind of liquidity can keep the market strong. It can even take the markets higher, irrespective of high valuations. So, what should investors do? Investors are sitting on good profits. Therefore, it makes sense to book some profits. Partial profit booking is advisable. We can err on the side of caution since profits are very high. However, it is very important to remain invested in the market. There are lots of positives going in favor of the markets. Indian economy is turning around very strongly. This year, financial year 21, we are likely to end with a GDP contraction of around 8%. FY22 is likely to show a sharp recovery in GDP growth and corporate earnings. GDP growth can be higher than 10%, which means the nominal GDP growth can be around 16% and corporate results can be very impressive. And with liquidity continuing to be benign, dollar continuing to decline, and foreign portfolio flows continuing to be very robust, well, the markets can surprise on the upside. If the Indian economy shows signs of robust recovery, sustained recovery for the next few years, the markets can certainly surprise on the upside in spite of high valuations. That's why it is important to stay invested in the market. Which are the promising sectors? The promising sectors going forward are, of course, pharmaceuticals, secondly, IT, financials, particularly the leading private sector banks, segments of FMCG, and automobiles. All these segments are highly valued, but then there is earning visibility in these segments. Remain invested in quality stocks in these segments. Continue with systematic investment plans. Invest in mid and small caps to the mutual funds. Happy investing for 2021. Best wishes. Thank you.